Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and last night I went and did something I had never done. I went to one of those axe throwing places, which I thought was pretty cool. I had never been to anything like that before, but I did throw an axe a few times, and it did hit the bullseye at least once. I think I hit it 2 or 3 times, but I'm not really good at it by any means. I just got lucky a couple of times, but it was something different. When I was there, I was sitting there thinking, man, look at all the liability in this place. Okay, let's do a refresh on this. We've got, looks like Bitcoin's crossed over 50K again. Ethereum's up a lot. XRP's up, but nothing special. Anyway, not too much going on in the markets. We do have this CoinDesk article where they're saying why $1 million Bitcoin is coming. Now, I'm not going to go all into this article. They're talking about how, purchases by MicroStrategy and Tesla sent the Bitcoin price rocketing. Maybe the announcement of those purchases, which were probably done before the announcement, I'm sure, maybe that did, but the point is they're making a $1 million Bitcoin prediction in this article, and I don't disagree that might happen. I think there's a few scenarios for Bitcoin. One is that they just do a crackdown. The governments of the world do just a total crackdown, and I'll show you more at the end of this video. One is that they do a total crackdown on Bitcoin. The other is that they let it flourish as a store of value, but it is not going to be the technology that changes the world's financial system. I'll show you the ones that are in a second. Michael at VAL 5 Links sent me this. This is John Deaton is the guy who filed the class action lawsuit against the SEC on behalf of XRP holders. Okay. And he was mentioned yesterday. His lawsuit was mentioned by Stuart Alderati, I believe, yesterday in his tweets. And so I wanted to show you this. John Deaton says this. He says, everyone should pay close attention to this. The SEC enforcement itself admitted in the motion to dismiss the writ of mandamus that the SDNY court will decide whether XRP is a security, not the SEC. When you take this admission along with the court's ruling in Tetragon, and couple that with the fact that between 2017 and 2019, companies and exchanges were asking the SEC whether they considered XRP a security, and the SEC did not inform them it was a security. You add in the fact that in February 2020, the SEC was instructing MGI how to record the market development fees Ripple was paying MGI in its financial statements, but not telling MGI it was receiving and selling unregistered securities. It leads to one conclusion. The SEC itself isn't convinced XRP is a security and is simply making a power grab and trying to expand its jurisdictional reach by engaging in regulation by enforcement. Below is my January 8, 2021 thread on this theory. There is other evidence outside the Ripple case fact that supports this power grab. XRP has dozens, if not more, of use cases, but the SEC hopes the SDNY will call it a security. In the meantime, Doge, which started as a joke and until very recently after the Ripple case, it is apparently a commodity according to the CFTC, until very recently had no use cases being developed. So John Deaton gets it, but he says he's got a theory that he put out on this thing, and he said they're trying to expand their jurisdictional reach. That's one of the theories. You know what the other theory is? The other theory that I don't ever talk about much, the other theory is that SEC and all these people are all on the same team, including Jay Clayton. That's the other theory, is that Jay Clayton took one for the team and everybody in all this whole thing is in it together. Now that's the wild theory, but that's another theory. Okay. Now, while I'm here, I wanted to let you know how you can go to John Deaton's website. He's got a website where he posts all of his followings of the SEC case and what he's got going on. His website is crypto-law.us. So go check his website out. He and Jeremy Hogan are doing great work in the space. CryptoDim sent me this. Bloomberg has added price data for 6 new crypto assets: XLM, Link, EOS, XTZ, OMG, and OXT. That cannot be a bad thing. And then Binance had tweeted this out: 3 cryptos, Bitcoin, Ethereum, XRP. If you had to put one in each box, what would you do? Well, of course, long would be XRP. Short would be Bitcoin. My hodl would be Ethereum, because Ethereum 2.0 is coming out. If there was no Ethereum 2.0, Ethereum would go directly in my short box with Bitcoin, because proof of work does not work. I'll put it here in the hopes that Ethereum 2.0 is actually going to be something. That remains to be seen. Okay, now this was shown to me by this XRP Crypto Quebec. This is I'm drawing a blank on, well, actually I got this out of turn. Hold on. I'm going to show you the clip of her in a little bit, but he sent it to me, he or she. Okay, but first I'm going to show you this one, because I'm telling you, everybody is starting to figure this out, folks. First, I want you to listen to what this guy says, okay? I guess he's from Stansbury. Listen to this.
People, I've watched all of the YouTube videos with all of these really smart guys talking about why they can't take down Bitcoin, even if they want to. And I've read and listened, and I think, I beg to differ. I think that you can never underestimate the resolve of governments and central banks when they're trying to protect their currency. You've heard of currency and capital controls. They've been part of our history in many countries, including the U.S. It came in the form of making the ownership of gold illegal in 1933, which lasted 40 years. That was a form of capital control to protect the U.S. dollar. You saw it in pre-1979 Britain, where there were currency controls. You saw it in South Africa. You saw it in pre-war Germany. You saw it as recently as 2015 in Greece, okay? So currency and capital controls, or a method by which to use that philosophy against Bitcoin, is a possibility, and you have to take that into account. So although I think that Bitcoin is going to go a lot higher, I don't think it's anywhere near replacing gold. And I don't think we're seeing any evidence that the major owners of gold, the institutions, are switching from gold to Bitcoin. You're seeing obviously a few big names like Paul Tudor Jones. I know he's been a big advocate of this, and I'm sure he's going to make a lot of money out of this. But it's not a general view in the investing public, and certainly not with the institutions, and certainly not with the central banks. Central banks own gold. They don't own Bitcoin. And gold is a core part of their currency reserves and always will be. And if they do anything, they will issue their own digital currency. They're not going to be buying Bitcoin, because they're going to try with all their power to undermine Bitcoin. And so that's my view on it. And again, I don't have a crystal ball.
Okay, and we know that the central banks are not going to hold Bitcoin, because Christine Lagarde said it in a video I played on this channel. But who is working closely with them? That would be Ripple. Working on piloting a private ledger for central banks, launching CBDCs. Okay, now Real XRP Boy brought this to my attention, and this led me down a little path as well. Goldman Sachs, what if I told you that Bitcoin was just the opening act? And then there's this from Barclays: the first big area cryptocurrencies could work well in is bank transfers and remittances, according to Barclays, as it could make it cheaper and even reduce the capital requirements of banks, as it would reduce considerably the counterparty risk. Then this was from David Schwartz. While proof of work has seemed to be a technological dead end, and networks using it are either stagnating or abandoning it. Ethereum is abandoning it, and both Ethereum and Bitcoin get congested. Everybody knows that. This is from Susan Athey, who's on Ripple's board, or an advisor, one of the, I think she's on the board. Given where we are today, I would imagine that in that scenario, we would migrate onto an alternative coin. People, I'm telling you, people are starting to figure out this whole thing. The whole Bitcoin was literally the first act, folks. Proof of work does not work. It never has. It was the first, I don't know, call it a test, whatever you want to call it. But it's not going to be what I'm about to show you the reasons why. But this right here, what you're looking at, this is a channel called Only the Savvy, okay? You should I'll give them a subscribe. This video that he put together was really good. This is I think it's from a Charles Hoskinson video where Charles Hoskinson was talking about this, or like a podcast, but then this guy put visuals over the top of it, and I thought it was great. So I clipped out a couple of parts of it. Okay, here's the first part. And this is Charles Hoskinson, who's a really smart guy. He's one of the guys that created Ethereum and left to create Cardano. Listen to what he says, because all of this is the truth, and they all know it.
Bitcoin is only valuable because it's valuable. It has no technological advantage. It's actually the least advanced of all the cryptocurrencies. The least feature risk. There's no reason for it other than the fact that it exists. And if the value plummets, no one will mine it, and then you lose all your security. So the minute that it gets flipped by another cryptocurrency, unless they can find a way to actually innovate again, Bitcoin will die, in my view, because there's no reason to hold it over its neighbors. This is one of the reasons why we work so hard with Cardano in particular, trying to build a proper governance system, because you don't want a situation every time you want to do an innovation, you end up with a Cardano Classic or Cardano Cash or these types of things. Bitcoin lost some of its earliest and best people over just the block size, a system parameter. It just tells you, if you can't even agree on something so trivial as a block size, then how do you get post-quantum crypto when quantum computers come? How do you get smart contracts? How do you get new ways of structuring the network stack? How do you move from a replicated model to a decentralized model? How do you throw data away? What happens when the Bitcoin blockchain is a petabyte and only two people can have it as NSA and Google? So what do you do with that? And if you can't decide a block size, how the hell do you decide these much more significant and serious things? You need a governance system that sits on top of it. And unfortunately, that's so far beyond the initial vision of Satoshi. So what usually happens is that when the evolutionary and competitive dynamics of the system are counterproductive to growth beyond a certain point, the system will stall. And then 1,000 flowers will bloom. The vast majority of them will wilt, but some of them will become a mighty oak, and they will replace the old system.
All right, so there you go. That's a perfect summary there. Now, this is another clip from the same thing with Charles Hoskinson, where he's telling more truth here. You got to listen.
And then finally, there are 8,000 cryptocurrencies. There's hundreds of legacy financial systems. You need to be interoperable. You need to have the ability to talk to all those systems. Could you imagine Wi-Fi if Wi-Fi was only constrained to the manufacturer? So like your Apple phone can only connect to an Apple router, your Google phone can only connect to a Google router. It just wouldn't work. I mean, there's nothing humans agree on, but Wi-Fi is the one true religion. You can be in North Korea, you could be in Iran, you could be in Israel, you could be in Japan, South Korea, China, Russia, and the United States, and your phone can connect to the Wi-Fi in all those countries. It's truly extraordinary when you think about that geopolitically, that's the one true faith of humanity, that and Bluetooth that we've gotten. So you kind of need a Wi-Fi Bluetooth moment in finance, and you need something where regardless of what system you happen to live in, there's a way for your thing to talk to their things, and there's a bridge for that. So whatever the third generation of cryptocurrencies happen to be, it has to do those three things. Your users have to produce as much as they consume so you can sustainably grow to billions. You have to have a Wi-Fi moment where everything just works. And
so you can grow to billions, and that reminds me of when Arthur Brito, one of the creators of the XRP ledger, said that they created it to scale to I think it was 7.5 billion. That was the whole point. Okay, now I want to show you this clip. This is from the one that was sent to me by, where's the guy? Right there. This guy sent me this, and I clipped it out because I thought it was so good. I'm drawing a blank on her name, but she's a really smart lady. She's got what's it called? ITM trading. I've shown clips of her interviewing Jim Rickards before. All right, so the battle lines are drawn. See screenshots below. It's all right in front of your eyes if you will just look. Watch.
2017 has abolished initial coin offerings and clamped down on virtual currency trading within its borders. If it was completely outside of the system, then how can they do that? I don't know. I'm not an engineer. Maybe some of you engineers can help explain that and write it in the comments. It's not out of the system. I'm sorry, you guys. I'm not saying I will never buy something like that, but I want to see where the dust settles first. I want to see who's going to survive, because I think we're coming up to a point here where the battle lines between private cryptocurrencies and CBDCs are being drawn. And besides that, what is the UN and the governments and the central banks talking about the Green New Deal and how many jobs that will create and those things?
Yeah, what about that? Well, everything she just said. First of all, we had this week. Ripple pilots a private ledger for central banks launching CBDCs. And then here we had Energy Web is starting with Ripple on its bid to make crypto provably green. And then this, of course, is one of the things that I've never forgotten. This was one of the people that disappeared off of social media and seemed to be saying a lot of things that made sense. Cryptocurrency will be made illegal. This is not now when you read that, I don't want you to think when I read that title there, I don't think what they're saying is that all of these digital assets are going to be made illegal. What they're saying is that cryptocurrency, in other words, that they're not going to allow another currency except for one, or except for a couple. Cryptocurrency will be made illegal. This is not a maybe, this is a warning. Nothing is left up to chance. Our world is always planned years in advance. If you fail to plan, you are planning to fail, and failure is not an option. Allowing additional currencies to exist when the world is only using one would be disruptive, so it will not be tolerated, and it will be easier to stop than you think. The illusion is that Bitcoin, for example, is untouchable. The reality is that it is government controlled through the use of mining pools. Any cryptocurrency aiming to be decentralized digital currency will not survive. The one that we will use has already been chosen. And this is the part to me that's always stuck in my head. The illusion is that Bitcoin, for example, is untouchable. That is really at the heart of this. It's not untouchable. If these governments want to rein that in, they can do it. Now, the best Bitcoin explanation that I've ever seen comes from this guy, and I want to play this for you. You got to see it because he really lays it down.
What is Bitcoin? Bitcoin is a peer-to-peer digital currency. It's anonymous and decentralized. It's like being able to teleport money to anyone across the world. No, I think it's actually being teleported. It's a way of educating millions of peers who track each and every Bitcoin on a public ledger called the blockchain. When you want to send someone a Bitcoin, you publicly announce that your account is sending a Bitcoin to the recipient's account. Since the leverage is a public record, everyone knows Bitcoins are associated with each account and prevents anyone from spending money that isn't there. In the old days, even banks would hold on for money, and they keep it locked up, make sure bandits didn't ride off with it. Since Bitcoin only exists as a record on the blockchain, there's nothing to keep banks on guard. All that matters is your private key. The Crystal Catholic calculator lets you access your account and save money from it.
Vince Clortho, Keymaster of Gozer.
As long as your account is key, no one can see other Bitcoins and you can send from anywhere. That's why Bitcoin is attracted to millions of players. Goldman Sachs, Microsoft, even the Winklevoss twins. Want to try out Bitcoin for yourself? Sign up one. So that it brings a digital currency for machines like Coinbase. And don't worry, it's in US dollars, at least for now.
Excellent description. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that we have the best Bitcoin explanation ever at the end of this video. Thanks for listening.